What's up, YouTube? It's Joe Catrapalia sitting on the couch making some money investing in fractional real estate online, as usual. I'm excited today about a new platform that I just found out about. This is going to just be first impressions. Don't have any money on this platform yet. Spent probably 2 or 3 hours looking through stuff, trying to get my bearings. But so this is it's Collab. It's collabhome.io. Somebody who's been watching the channel reached out to me. They joined the Discord, reached out to me through there, mentioned that they're investing on here, and thought I should check it out. And I'm glad that they did. Thank you very much for that. It is There's a lot that I like about it. There's a few things that I'm going to be critical of. But it's early. I think they're relatively new, so there's not a ton of properties on the platform yet. And I think they understand that based on some of their comments in the Discord, because I joined their Discord, took a look in it. It was a little bit active. There's quite a few comments, but in any case, what are they doing? They're doing investing in student housing. This model, I would say, it's kind of like the Arrived Homes model, or maybe more closely, Arc 7, or really Mogul, right? And I'll say that because, so they're investing in student housing. You don't have to be an accredited investor. It can be as little as $100. Some of the properties you need 300 or 500 as their minimum investment. But what makes them stand out to me right away is their team has some real estate experience. Um, it's not I'm a tech guy that bought a couple of houses and then realized I needed to create this platform. I've been, buying and managing and doing things in real estate for, in some cases, multiple decades. That is the kind of person who, if I were going to put my money into a deal with somebody, that'd be the ideal situation for me, right? So that right off the bat, really glad to see the real estate experience on the platform. It's something that I don't see in a lot of them, and sometimes when you do see it, it's just not even that much. Um, that being said, one of the things whenever you have companies like this, it's always tough to tell, are these people that got recruited and but aren't really, in doing the day-to-day operations. But at least, their founder and chairman, their chief executive officer, both have real estate experience. They've got at least a couple other guys, yeah, real estate professional here, but 7 years managing properties. You know, this is something that's just lacking on a lot of the sites, and so I was pretty glad to see that. Um, they are doing something a little bit different. So uh, they're buying properties, um, targeting markets that have a university because it's student housing, but they're not buying in all different markets and hiring third-party managers. They're actually they're managing the properties themselves, but they're doing it with this, and this is, I think, part of the collab name, right? Is like they're collaborating with the tenants and with people in the community. So they have this thing, and it's a little bit confusing to me, but there's this task center, and so anybody can come in and do these tasks. And so these are things that need to be done at some of the properties, and anybody can come in and claim it. They do the thing, they, post photos that they did it, and then they get paid for it. Um, I think this is really interesting way to manage a property. And I think for a lot of like non-emergent stuff that might, if it's not an emergency, I can see that working. I'm curious when you have things like somebody locked out of a property, somebody's heat is broken and it's freezing out, plumbing leak that needs to be taken care of right away. I'm curious if this is how they're doing it or not. I haven't dug deep enough into it to know. They also have all their own, all their rentals are on their website, and you can view any of the properties that they have. You can look at whatever units are available if they are. You can see, these are in California. These are much higher price points, rents per month than I'm used to seeing. California, so they do have, they've got a couple different markets. I saw some, at least one property in New Jersey, a couple out in California by Berkeley, the New Jersey one's by Rutgers. I'll probably take a deep dive into that property first. I think I'm not going to do that tonight. Um, I've started to do maybe too long of videos for people to want to sit through. So I'm going to try to just really talk about the platform, tell you what I like and don't like about it tonight, and then I'll jump into one of the properties tomorrow probably. But probably the one in New Jersey because I've lived there. I know that market. I actually went to Rutgers for law school, but actually just their Camden campus, so it's not the same. But I've been in that, been close enough and been in that market quite a bit. Um, but so anyway, so they're putting their own, so and it's rent by the room. Well, most of them seem to be rent by the room, although this does not. These ones actually seem like um, hmm, they're all sold out. I know I saw them maybe on another page, but some of them they're definitely just renting the rooms, and so when they're telling you their units, they're telling you, how many bedrooms and how many bathrooms, and that's what they're calling units. Like this home here, it is number of beds and baths, 9 bedrooms, 3 bathrooms. I think it's a strategy that works pretty well. But yeah, some of these are not, right? This is just a 2 bedroom, 2 bath over here. So I don't know. I haven't really dug into any of the properties yet, but there are a couple things I wanted to point out from what I have looked at so far. So you know, one of the problems I've seen with this model with a lot of the companies like Arrived Homes, Arc 7 is it's hard to so they're when they're selling their interests, they are um, they're uh, registered SEC securities, and so that adds a lot of expense. And so one of the things I've seen with this model is they have a hard time giving you properties that are profitable because there's a lot of expense involved in doing that. And so I'm going to look at the fees and then I'm going to jump into the returns that they do. So let's see. This is just from the offering circular, which is not easy to find unless you sign up on their site. But you can search it in the Edgar database. Um, I actually just signed up and found it this way, but you don't have to do that because these all end up being public when they file them with the SEC. But so they have multiple sources of multiple levels of fees. They're doing this assets under management fee. And so, well, actually, no, that's the second one. The first one's a sourcing fee, and it's 5% of the purchase price of the property. I've noticed in some of the properties, it doesn't seem like they actually charge the full 5%. And they do mention that if they can't raise enough, that they might just take a little bit more of the property and not charge a fee. But so 5% of the purchase price, that's a big fee up front. Then they have this assets under management fee, which ends up being 2% per year. And it's 2% of the property value per year. So like if I have, $100,000 property, I'm charging $2,000 a year on that. Um, it seems like a pretty hefty fee to overcome. I think we saw um, it ends up being a 0.5% per quarter. I think we actually saw one on another one of a similar one on um, I can't think of the site, but one of the other sites that I looked at and decided against investing on had done this, and because it seemed like they couldn't really overcome that fee. I think that site had some other problems too. But so okay, first you paid 5% of the acquisition, you're paying 2% of your property value every year. Then you have their property management fees, and this varies by from one series to the next, and so like the way they have these broken up, no, here is in different series. So you have the Buttonwood one, that's one property. You have the one I was looking at earlier is this 2340 Hillgard. Um, And so in the individual series, you have to go and look to see what the actual management fee is. I think it probably varies based on what's required at the property. You know, if they're doing a rent by the room versus whole units, I think it's probably going to be different. Then they charge fees if they have to do any capital improvements. You know, they charge 5.5% of those total capital improvements, which is high in my mind. I mean, I've seen that a lot of times at 3% for when I've had. I mean, this is a different animal though, but when I've, you know, the only thing that I always compare a lot of these deals to in my head is either when you have you know, syndications or funds doing things, and so you know, it's not really the same scenario, but it's, you know, again, I mean, 5.5% of the total capital improvement cost seems like a big amount to oversee that. And then a disposition fee, another 2%. So all those together um, seem pretty difficult to overcome. And then in addition to that, they do, where is this? They have a setup where um, they when it sells, it's not split exactly pro rata. And I want to say I'm gonna have to find that again. Where I don't think I saw it in this section. I think I saw it somewhere else. Um, where I think they're getting, I think what they're getting is another 20% of the appreciation, like an additional 20% beyond what you'd expect, just based on you know, based on and 80% to the member. Second, 20%. Okay, wait, what is this? Is this the section? Yeah, distributions upon liquidation of the series. 100% to the members until the members receive all their capital back, right? And then they get 20% of whatever the remaining amount is. So when it dissolves, you know, you're end up losing out a little bit on that back end too, right? So it's a whole bunch of fees built into this. And so one of the things is I'm curious, you know, where because of that, uh, you need to have just really fantastic deals to overcome that. And I think, you know, um, Mogul is a site that I've been on quite a bit. And that reminds me, I should always stop and say, please like and subscribe. And also, I have links in the description below to all the platforms that I'm already invested on. The reason I thought to say that finally is because Mogul is one of those sites, and you know, they have a similar model. They've got, you know, real estate guys that go out and find properties. Although they're not managing it themselves. They're using third party managers, but seem to be, you know, negotiating low rents or low rates, low management fee rates. So they're doing it, you know. But so what I'm saying is, you know, they have pretty high fees, although they see, I believe their fees altogether would be less than these. I haven't done the math and compared them, but it seems to me that their overall fees would be less. But the reason I still invest on there is because they are able to find really good deals and that can overcome those fees. And I'm not saying every single property that they have that's true. Um, but in my mind, at least one good, you know, they have at least one or two good ones that I've seen already, and they're in sort of a similar boat where they're, you know, they're sort of new. They don't have a ton of properties yet. But so, you know, in situations where, you know, where they have this model where they do just have to just have a lot of fees, although Mogul is different because they're not securities, you know, they're not registered securities. And so I think that saves them quite a bit of money. And that's part of why they, you know, it's a little easier to overcome the fees that they have. But in any case, you know, you just have to have really good deals. And so, like, Arrived Homes does this, you know, it's a very similar to the Arrived Homes model, but all of their properties are paying out like 4 or 5%. And I'm just not very excited about a 4 or 5% distribution and, you know, then getting some appreciation, but that appreciation gets muted because there's additional fees, you know, on you know, on dissolution and everything. And I think that that's probably, I'm worried that that's going to be the case on this site, although they have reasonably high annual distributions on some of these. like I'm okay with this, 0.75% annual distribution, like that kind of return. It's lower than what I'm getting on the Axelrod on Mogul at the moment, but this is a much different model, right? I think student housing is a more stable model, so I wouldn't expect to do as well as I'm doing on a short-term rental, for example. And again, that other one is early as well, and maybe it doesn't even hit, maybe long term it doesn't hit the numbers that it claims it's going to, right? But so that's not terrible, but I'm really worried about this projected annualized return, and I'll show you why. The annualized appreciation returns, right? What they're doing is they're taking, um, you know, they're using 4.3% per year, based on national averages for multifamily apartments, which and they're using the CoStar database, and so I don't know. I used CoStar quite a bit in my life. I don't know that I've seen a whole bunch of properties that look like this on CoStar. Once you start to get to a little bit bigger ones, I think you do. And who knows, maybe in this market, because where price points are, that they would show up. But one, they're just taking a nationwide, this is what it has been, and over the last 20 years, right? And I think that is too short of a time period. Maybe that's as far back as CoStar goes. But the last 20 years are not very similar to we, especially because that includes the last 5 years where we've had just unbelievable appreciation. It worries me to use this big of a number in our assumptions, and then so you've got this much. You're using what I think of as a somewhat high number for appreciation if you're not going to justify it with local numbers, right? Like I'd like to see them, and maybe there is somewhere else. And like I said, I have to dig more into individual properties. But whenever I see something like this, that this is how they're calculating it, that just sort of worries me. And so, to hit this annualized return number, you've got to hit that pretty decent appreciation rate, and maybe you will. Um, I don't know that I'd be excited to try to hit that in New Jersey. I don't know. I feel like they've done all right the last couple of years, though. That's the market I left when I moved to Texas, um, in large part because I just expect where I am now to be a much better market in the long run. Um, but there's a couple of things going on here, right? It actually seems like they're picking markets that are not very landlord friendly, or at least the couple that I've seen so far, and it makes it tough to run the business, but if you're good at it, it creates a big barrier to entry for competition. And so because of that, you often do get higher appreciation in the markets where in those markets. And so it's a little counterintuitive, but a lot of times the markets where it's tough to be a landlord, properties appreciate better, but you don't necessarily have, fantastic cash flow. Um, they're doing all right on all of these, right? I mean, and one of the things too is that they mention in here, um, it's, the annualized, it's the pat, if they have their past 12 months, and if not, then they're using, just, year to date or since it started. Um, it's one of the things, some of these properties, it takes them a while to sell out. And so you'll see, inside their files that they'll have like several months posted of the performance. And so that's interesting. One of the things that I like about some, like for example, Lofty, you can buy into one that you've seen on the platform for a very long time. That's not the case here. There's not this secondary market to buy and sell afterwards, but I can wait and, if it's taking these a while to sell out, I can look at, several months of their monthly statements, and then some of them they operated for a while before they tried to do this. So they all have some operating history. None of them are ones that you're just kind of stuck, um, looking at it immediately. I think that's pretty good. Uh, and so I don't know. Like I said, I mean, 7.5% is a pretty good return on the face of it. And if I believe, if I once I really dig into this, if I believe I'm going to get, the appreciation is there to be able to hit this 15.8% IRR. I'm not super excited about that return relative to what I'm getting elsewhere, but it's not a bad return by any means, right? And honestly, I'm more inclined to get a lower IRR if, the higher my current payment is, right? Because that's just that's a trade-off that's like de-risking it a little bit if I'm getting higher cash flow immediately. But so I don't know. They're not. I'm not super excited about this, but it's at the same time, um, it depends on once we really dig into it, how conservative do we think that estimate is? Do we think, yeah, there's a really good chance we're going to hit that, or is that really a best case? And I don't know yet, right? And so that's one of the things that we have to figure out. But I'm going to show you a couple of things that they did. Um, let me go. Um, Yeah, a couple of things that they did that I think, or a couple of things that they claim on here that I really gives me some pause and makes me wanna, it just makes me worried a little bit, but it's not the end of the world. But like one, whenever you see a company claim their investment is recession proof, I mean that really bothers me. I got into self storage pretty heavily in the like right before and going into the 2008 timeframe, and everybody really pushed that as being a recession-proof asset class, because as people get kicked out of their apartments, they've got to put their stuff in storage, and it does. I think that there is definitely recession-resistant asset classes. There's things that do better, and when we did have the Great Recession, you saw a lot of people went back to school. Um, and so that is, I think that's kind of the thesis, right? Why student housing, they call it recession proof, but I'd much rather have them say recession resistant. That's just me being, very overly um, cautious in the way I try to tell people. I'm always, and I've actually seen this on a lot of these sites. Many of them are just way too salesy, in my opinion. Like when my team is helping people find investment properties, I'm never making some sort of comment like this. Like I would just think that that's, um, far too strong uh, to just come out and give that impression, especially because you're targeting a lot of investors that maybe don't have a ton of experience and are going to maybe take that too literally, right? The other thing is, access to institutional quality real estate. Um, I think that's a stretch, right? Like, I spent the first half of my career working for larger institutions, and I just can't imagine that we were going to own this property um, or this one. Depending, but I mean, it depends on the size of the institution. They do have some that are a little bit. What is this panoramic way one? Um, they do have one or two. Oh, I know where I saw it was in the rental section, right? They have some that are a little bit bigger. And okay, maybe when we get to these ones, now we're really talking about, more institutional quality. So I guess, it's not, it's not, you maybe have access to it, but it doesn't seem like that's what they're mostly doing. And if it is, if we are going to call it institutional quality, it's going to be, I mean, and this is again me being maybe a little bit of a real estate snob, but this is like the very bottom end of what any sort of institutions are going to buy, right? I mean, this is in most markets, I would say it's a mom and pop investor that owns something like this. I think that's perfectly fine. Like to me, I don't know. I don't necessarily think you have to, I see that on a couple of these sites, and I just don't know why. I think their team, right? Like, I think that you have access to an institutional quality team that's picking properties, right? Like, I think I'm very happy with saying that when you look at the experience that they have explained on here, and so maybe that's what they think of. They're thinking. I don't know. Um, but just when I see stuff like this, like I'm a big fan of not trying to overpromise on stuff. And so, I had read through that before I really started looking at the properties. And so I had one thing in mind. I have a couple of good friends that work at a large student housing provider who that in my mind when I think of institutional quality deals, I think of like what some stuff that REITs buy, stuff that large private equity type investment groups buy. And those are the really high-end student housing that you see either sometimes right on campus, right, where it's like a private public partnership, and sometimes right off campus, um, or depending on if it's a public university or not. But in partnership with the university sometimes, and sometimes right off. But that are just seem like almost more like resorts than so that's in my mind what I was looking for. And when I jumped into the properties, I was just a little disappointed to see that that's not really the types of properties that we're getting there. I don't, again, I don't need those type of properties. Like on Lofty, I'm buying stuff that is very bottom of the barrel, mom and pop type, investor properties. But if you get them at the right price point and you run them well, or you have a good plan for it and they're managed properly, you can make fantastic returns. And so I don't know. I didn't see a need for that kind of, and sometimes the people that make the site aren't necessarily the people that are doing the day-to-day operations too. I'm super curious if you asked that founder and chairman, if you showed them that property by records and said, is that an institutional quality asset? What do you think? My guess is he'd say no, and didn't realize that. But again, I mean, I don't think that's the end of the world. What I really care about is, can we buy properties on this platform and make money? Um, the really layering of fees is going to make it hard to figure out. Oh, this, I keep accidentally clicking on this deed. They make it easy. I didn't actually have to look this up in the county records. They put links into all the properties, so they do make it easy to do some of your due diligence. They provide, um, where are we here? So when you actually get into the property pages, they provide lease performance and some daily. They show you the daily operating tasks. So the things that like they had put out for tasks for people to do that I was showing earlier in the task center. This is where they have their property description, where how everything's going. They give you a little bit of info on the market, all the property documents. I mean, so they set you up to make it somewhat easy to do your due diligence on it, right? I like that they give you a copy of the deed, and you've got the offering circular right here, and then so they give you a lot of good information. And just like with all the other sites, we're going to do our due diligence on the platform, and then we're going to get off the platform and do all the stuff too, right? We're going to look at the FEMA info and the check. This will be tough to compare rental rates on Zillow. So this size property. We have a lot of difficulty, at least in my market. So I used to use a CoStar subscription and just use our MLS and use our lot of local data, and the properties that are like um, not just a single family home or duplex or fourplex, but also not like the large, what I think of as institutional real estate, the stuff that sort of sits in between those two. It's really hard to get good data on. So we're going to have to really think about what we can and can't do as far as do they even provide a deed use of proceeds? I don't see an appraisal. Let's see what we get in the property overview. Yeah, this is just from the circular. Um, and then we can look at the whole operation. Yeah, so I don't know that they even give us an appraisal on these, which is, if I don't have the appraisal, and I can't just jump into like Zillow or something on a property like this and expect it to be accurate in the same way that I would with a single family home. Um, oh, this one's a condo. It's just a two-bedroom condo inside of this property. Uh, so yeah, I mean that I don't know. That's really a reach, right? This is just um, that's an aside. I'm gonna stop talking about it not being institutional quality because it's just one little comment they made on there I didn't like. But that sort of stuff is when I'm having a first impression of a platform. It jumps out to me, right? Like, am I getting or am I getting an honest description of what I'm buying or not? Um, So yeah, so it's a two bedroom, two bath condo. Okay, so yeah, we are going to be able to use Zillow to price this one. That's what, they're doing rent by the room. So a lot of these properties are going to be maybe just a house or a condo. Like this one seems like maybe it's a duplex or fourplex or something. Um, oh, and I did have. So one of the things I don't know if I show you guys or if I do this is when you right click and search with Google Lens. I always like to do that when you find these properties here. Um, that's a lot of times how I'm finding the Zillow listings pretty easily because I find um, oh, why won't you yeah, I want to see this on Zillow. Let's see. Oh, and this is actually the rental. This is actually the rental listing on there. It's kind of interesting. Several one, I'm not going to dig into this too far because, like I said, I'm gonna try to do this tomorrow, where I'll actually take this property and do sort of a deeper dive into it. I think that trying to do that now is going to be too much. Already talked about the platform in general for about 30 minutes. If just really just giving you my first impressions. If you've used this platform and you think I've got some stuff wrong, please let me know. I mean, that's the big reason I'm doing this. I'm trying to share some of my knowledge and experience with everybody watching. But if it's a really new industry, right? And so there's not really anybody that's an expert in this space that is like the fractional real estate investing space in general. And so I'm sure there's some of you that have been investing on here, I don't know, maybe for a while, right? And might have a little bit different perspective. I don't know. One of the things I'm curious if they've held any to the point of selling out, and have you gotten an IRR similar to what they told you? I don't know. I don't know if they've even had those yet. That's one of the things I'd love it if all of the sites would give historical data on all their deals, and it seems like none of them want to do that. My guess is a lot of them underperform significantly on a regular basis, or maybe not even significantly, but enough. Maybe if on average they're not hitting those returns, then it looks ugly. But then at the same time, I think the other issue is there's just almost all these platforms are new, right? And so you're just not going to have that data. But at least the monthly operating data for these ones, is available for, like I said, that going back at least several months on a lot of them. So that's promising. I like to see that. I think that's all I'm going to say for today. Please do share any experience that you have with this platform. And then, like I said, tomorrow I'll try to jump into that one particular property. Sorry about that. My screen recorder froze. It's actually been good for the last few videos, so it decided to be right at the end. But yeah, so like I said, I'm gonna try to look at that specific property tomorrow, maybe a couple others. If you've invested in any of these and you want to share some insight on them, that would be awesome. Also, don't forget, if you're not haven't joined the Discord and you want to get in there and talk to some people, we've got a few people in there already had a couple good discussions, and so please do that. And that is really it for today. Until next time, I'm going to keep making mistakes so that you don't have to.